What's up, guys? Roger here with Vantage Home Loans. I don't really ever do these live, so I'm going to go on live and explain why did mortgage rates go down after the Fed announced rate hikes. This makes absolutely no sense at all, and people think the Fed raising rates is not connected to mortgages. It absolutely is, and I'm going to explain to you how this works. I've been in the mortgage industry for 13 years. And it took me a very long time to understand how this stuff works. So I'm going to explain it as simple as possible. And basically, the reason is this: the Fed making announcements. Okay, no, excuse me. Mortgage rates change based on rhetoric from the Fed from the past. Okay. So about a month ago, when the Fed announced we're going to raise mortgage rates by 75 basis points, okay, next month. So this was the end of June. They announced we're going to raise rates end of July, 75 basis points. Mortgage companies, the banks, they don't wait until next month to raise the rates. The second that announcement is made, they raise the rates immediately. That's why rates were so high in June, because that's when the market was at its worst. And the Fed said, we're going to raise rates aggressively. So when they say that, mortgage companies make the adjustment right away. They don't wait until June 29th. Okay. So the Fed meeting 2 days ago announced, hey, we said last month we're going to raise rates. So they went ahead and did that. But what else did they predict? What else did they say that they're going to do? Well, we all know the Fed is not meeting again till September, so they have 2 months off. They didn't commit to raising rates again. They didn't say anything about that. So because their outlook was, hey, we don't know what we're going to do in 2 months. We may raise it, we may not, but we're not going to make any commitments. We're going to kind of wait and see. We're going to wait and see what happens with the markets. Then we're going to decide what we want to do. So if they had come out and said, we're raising rates 75 basis points again, then rates would have gone up. But because their stance was very dovish, people would say dovish is more like soft, right? Because it's more soft. Hey, we don't know. We're going to wait and see. Mortgage companies, the stock market, everyone took that as positive news. Like, hey, they didn't say they're going to raise rates. So we think they're either going to A, not do anything, or B, if they do raise rates, it's not going to be 75 basis points. It's going to be maybe 50 or 25. It's going to be a low number. So what does that mean? That means inflation's going in the right way. Inflation's going back down. And now we have a better outlook. Things are looking better. Things are looking rosy. So because of that, the market said, this is great. Stock market took off, crypto took off, and mortgage rates came down because they're expecting the Fed to soften their policy, which is going to be a positive thing for mortgage rates. So rates this month compared to last month are down almost a full percentage point. We're looking at something in the mid to high 4% range. So they've come down pretty drastically on this news. So we'll continue to see what happens, but something to keep in mind, whether you are a real estate investor, home buyer, or even if you own a home, maybe you're looking to refinance, tap into that equity. This is something to keep an eye on because rates are coming down. And to understand generally how these markets work, things happening today are based on sentiment. It's based on feeling. What do we feel the Fed's going to do? What do we feel the economy is going to do? And we're going to get ahead of it. We're not going to wait and keep rates high and see what happens. We're going to anticipate. So everyone's anticipating the next Fed meeting in September is going to be a lot softer. It's not going to be a 75 basis point hike, maybe 50, maybe 25. Either way, we're going in the right direction. So that is basically why I just want to hop on, make a quick video. Never done a live before, maybe once years ago, but just hop on real quick and explain, because sometimes I go on the Facebook groups and it's like, mortgage rates are not related to the Fed raising rates. They are related, but it's more on sentiment, feeling, rhetoric, prediction, rather than what they actually do. It's not based on what the action that they have taken today. It's based on the sentiment of what's going to happen in the future. And then the market reacts based on that. So just a little tidbit thought I'd share with you guys, kind of make it simple. A lot of misinformation out there. So I just want to clear things up. Hope you guys enjoy this live. If you do, leave a comment, like, subscribe to the channel. Thank you guys for watching and have a great weekend.